Hey friends, welcome back. A new week for Bitcoin has kicked off, and it's starting with some big green candles. We're back at the $87,000 mark, and contrary to my previous short-term expectations, Bitcoin is on the rise. Can we now say with 100% certainty that we will continue to grow and reach the $91,000 to $92,000 range? Or is there still a chance that we might end up reaching the $74,000 mark instead? Today, we will naturally discuss this and move on to the schedule. But first, just a quick reminder, I recently started a Telegram channel where I regularly share my thoughts, important updates, upcoming events, and detailed analysis. If you haven't subscribed yet, I highly recommend checking it out. The link to my Telegram channel is below this video. Join my Telegram channel, Alex Cryptofell, subscribe, stay updated, but now we are moving to the schedule. All right, friends, let's jump straight into Bitcoin because there's a lot to cover. It is interesting to recall that during our last discussion, we talked about what is crucial for Bitcoin to experience significant growth. We need to see a breakout and subsequent consolidation above the 200-day moving average. Additionally, it is important for Bitcoin to surpass and hold above the level marked in yellow, which is 85,600. We look at this based on the last low and the volume, and then a breakout of the trend line and consolidation above it. Let's now take a closer look at what has already happened and what we can potentially expect in the future, and then try to predict how events might further develop from here. So first, it looks like we've broken through the 200-day moving average, which is a significant technical indicator for many traders. However, keep in mind that we've seen false breakouts before, so it's important to remain cautious. Today and tomorrow, it's crucial to watch the daily candles closely since we're analyzing the daily time frame. To confirm the breakout, we need to see at least 2 daily candles closing above the 200-day moving average. This will help us determine whether the breakout is genuine or just another false signal. Accordingly, if today or tomorrow we suddenly fall below the threshold again, it would still be considered a false breakout. In that case, we will continue as before, following the same patterns and strategies we have been using. The probability of a significant fall is high. Accordingly, if we see consolidation, there remain only a few important resistance zones to discuss. The first zone is the yellow level. It almost coincides with the 200-day and average moving averages. So if we consolidate above the 200-day level, we can say this level is also significant, and the third is the trend line. So the question now is, under what conditions can we take long positions in this zone with targets, say, $92,000? We'll talk about the targets a bit later. In my opinion, we need to see more details. At the very least, I will open the 4-hour time frame now. We need to see a structure of 4 out of 6 points to make an informed decision. What is this? That is 1. This is the minimum option available. The optimal option is 5. In this particular case, we obtain a complete structure from which it becomes less risky to consider taking long positions. Accordingly, in this zone at the lower boundary and with targets in the $90,000 to $92,000 range, this would be considered a good setup. Until this consolidation occurs, we cannot definitively say for sure that we have broken through and are heading higher. Chat, let's discuss another topic later. Now, let's delve into why the $90,000 to $92,000 zone will act as a resistance for us. This is an important level to consider. After that, we'll figure out whether consolidation in this area will indicate that we are poised to continue growing. Essentially, we need to understand why the trend might be broken at this point. So why exactly is the $90,000 to $92,000 zone significant? First of all, we have these lows right here, and this is exactly the zone where we broke the trend. We had an upward structure, and here in this zone, we transitioned from an upward to a downward structure. To continue growing, we need to break through this zone, which currently serves as a resistance zone. Additionally, we have this somewhat peculiar structure. But let's take a closer look at the volumetric structure to determine where its main trading volume is concentrated. We overlay the indicator and we can clearly see that it is located right here. This is exactly the $89,000 zone. Accordingly, between $90,000 and $92,000 is our main resistance zone. Besides, let's open the 4-hour time frame and see that we have this interesting price channel within which we are moving on the 4-hour time frame. On the daily, we have a downward structure, and on the 4-hour, we have an upward structure. Please note that the upper boundary of this price channel is also situated in the $90,000 zone. The quartz arrival completes the price channel, after which a downward exit into the second phase is expected. We have a significant resistance zone above that will prevent us from moving higher, so our long targets can only reach up to $92,000. Beyond that point, we will inevitably encounter huge resistance, which we will have to fight against. This is one key point. From the perspective of that, we can continue to grow locally now. So when is the right time to start building a position? Now let's move on. Before that, guys, a quick traditional reminder. If you're trading, always use a reputable exchange. For me, Bybit has been a trusted partner for many years. If you don't have an account yet, you can click the link below my video, sign up, and give it a try. Please go directly to link 1 and use promo code 24676. Come in, try it. This isn't financial advice, just my experience. I've traded on Bybit for years and I'm really happy with it. If you haven't tried it yet, come in and try it. Like it, don't like it, don't like it. Thank you all, dear ones, for using my link. Your support means the world to me and helps my team and I get extra bonuses and perks, which helps us grow our community and improve our content. But we are going further, so the next point. When can we say that Bitcoin is back on the rise and heading towards new all-time highs? In my opinion, it is only the 90 to 92 zone, and that is the time when we broke through this particular zone. Have we settled above this zone? If so, we can say that the downward trend is broken and we're on our way to reaching new all-time highs with Bitcoin. Up to this point, we might easily come here, trade below this level for a while, and then eventually return. For us, that would basically confirm that we're heading downwards. In other words, we broke this level, came back to confirm it, and then continued to slide down further. How to act in such a situation? So, I'm still finding the long levels to be quite appealing when viewed from below. There are two key zones to consider, the $77,000 to $78,000 range, which represents the lower boundary of the purple rectangle, and then the $74,000 range. These zones are crucial for understanding the market dynamics. In both areas, I will be opening long positions once again, with the aim that we might potentially go lower. In conclusion, I want to summarize. I'll always try to sort of sum things up in a concise manner. So, we can never truly understand where exactly the price will go. It's just a chimera. We don't know what will happen. As traders, we need to adapt to the situation at hand in order to succeed. So if the price keeps consolidating, then I, at the very least, will place my bet on the continuation of growth to the 90 to 92 range. If I see a setup in this range, I'll open long positions targeting 90 to 92. If consolidation doesn't happen, for example, if tomorrow's candle goes lower, then I'll be looking to catch long positions in the 77 to 78 range and lower, around 74. So, at the moment, I have 3 specific setups that will work for me, and I will be opening these setups soon. This doesn't mean that one of these setups will definitely happen. No, the situation can change. We might see something like today's candle going here, then returning there, and we'll find ourselves in a different situation and we'll need to think differently. But this could happen as soon as tomorrow, which means tomorrow we'll sit down and look at the situation with fresh eyes and evaluate it. For now, I'm looking at what's on the chart today and considering how I can potentially act on it today. I'll be trading one of these 3 setups. Perhaps 2, yes, it depends on how events will develop. Share your thoughts. If you found this useful or liked it, hit the like button on this video. Share your thoughts in the comments. Let me know what you agree or disagree with and ask any questions you have. And of course, if you haven't subscribed to the channel yet, please do. It's very important to me. I'm starting from scratch in the English-speaking space, so every subscription, like, and comment means a lot to me. It really touches my heart. That's all, friends. Thank you all for watching. Wishing you big profits. See you soon. Bye-bye.